Dividend stocks, in my opinion, is one of the easiest and safest way to make passive income. Why? Because all you do is buy the stock and hold on to it. And as long as you hold on to that stock, you get regular payments just sent to you. And on top of that, you get stock appreciation. If you're new to investing or simply want new strategies, I'm going to teach you from A to Z how to invest in dividend stocks. All I ask you in return for this free course is to give this video a thumbs up for the algorithm and subscribe for more investing videos. All the apps and resources I'm going to mention throughout this video are going to be all linked down below, so make sure to check that out. In this video, we're going to cover what dividend stocks are, what to look for in a dividend stock, what dividend stocks to invest in, how much money can you earn from dividend stocks, stock appreciation, and lastly, a step-by-step tutorial on how to buy them. By the end of this video, you're gonna feel so comfortable taking the first steps of investing. And one thing I can promise you is you're gonna understand everything because I make sure everything is simplified and beginner-friendly. So without any further ado, let's get into it. So what are dividend stocks? Dividend stocks are shares of companies that pay a portion of their earnings back to shareholders in the form of regular cash payments. Think of it as a company rewarding you for investing in them. These payments can happen monthly, quarterly, or annually. It all depends on the company. So what are some benefits of investing in dividend stocks? The first one is, of course, passive income. You earn money without doing anything extra. Whether the stock price goes up or down, as long as the company pays dividends, you receive a steady stream of income unless the company decides to cancel it, which they can do, but I'm going to present you some options on companies that have never canceled their dividends. Number two, stability. Dividend-paying companies are often well-established and financially stable, making them a safer choice for many investors. For example, think of companies like Coca-Cola or Johnson & Johnson. Remember, companies that pay dividends have to be in good standing because they're sharing their profits with you. Number three, compounding. By reinvesting your dividends, you can purchase more shares, which in turn generates even more dividends for you. Over time, this compounding effect can lead to significant growth in your portfolio. So let's say you get $300 in dividends. You can use that $300 to invest even more in that company. So the following year, you can get double that or even triple that depending on how much you invest. Number four, historical perspective. Dividend investing has been a proven strategy for building wealth for decades. Many successful investors rely on dividends to create a reliable income stream, and a lot of investors do this for retirement. Here are some examples of dividend-paying companies. If you want to see what I personally invest in, head over to the first link in my bio and download the app Blossom. It's free of charge and you can see exactly what I buy, and when I sell. Now, some well-dividend-paying companies are Procter & Gamble, Microsoft, and AT&T. These companies are leaders in their industries and they have been known for paying dividends for a long amount of time. Now, here are some examples of companies that have increased their dividends over the years. Coca-Cola and Johnson & Johnson have consistently increased their dividend payouts over the years, showcasing their financial strength and commitment to shareholders. If you want a written version of this video and just learn more about stocks, I wrote a short ebook for beginners to learn how to start investing in the stock market. It's gonna be linked down below. Now, let's get into part two, what to look for in a dividend stock. First factor you have to consider is dividend yield. This is the percentage of the stock price that the company pays out as dividends annually. For example, if you buy a stock for $100 and it pays you $5 a year, the yield is 5%. While a high yield can be attractive, be cautious of yields that are too high, as this may indicate underlying financial issues. It's almost like these companies want you to invest in them because of their high dividend yield, which is not healthy. The second thing is dividend growth history. Look for companies that have consistent history of increasing their dividends over time. This is a sign of strong financial health and a commitment to rewarding shareholders, as we just saw with Coca-Cola and Johnson & Johnson. Number three, financial health. Strong revenue growth, increasing profits, and manageable debt levels are essential. You want to invest in companies with a stable business model and solid future prospects. You can find this on any company's page under Investor Relations. You can see the company's quarterly earning reports, annual reports, and any other information you need. Everything is public. You can see everything on there, how much money they earned, how much debt they have, if they're profitable, and so on. As a beginner, I would of course invest in a company that checks off all those boxes that I just mentioned, but also a company that I personally believe in. Let me give you an example. I love Apple products. It's all I use. I believe in their quality, their invention, and I think they're not going anywhere. This means I feel confident in their future and I feel comfortable investing in them. If I were to invest $10,000 in them today, I really would not be worried. I'm not only confident that my $10,000 will grow, but I'm also confident that I'm going to get dividends and they're going to grow. This is exactly how you should feel when you're investing in a company. Now let's go to part 3, what dividend stocks to invest in. Before that, if you've been enjoying this video so far, please give this video a thumbs up and subscribe for more business and finance videos. First type of dividend stocks you should look into are Dividend Aristocrats. These are companies in the S&P 500 that have increased their dividends for at least 25 consecutive years. These are considered the gold standards of dividend paying stocks. The S&P 500 in short means the top largest 500 companies in America. An example of a dividend aristocrat is McDonald's. They have shown consistent performance and a commitment to rewarding investors. Why are they reliable? Well, their long history of dividend growth demonstrates financial stability even during economic downturns. Next up, we have REITs. Now, if you follow me on Instagram, you know I love my REITs. REITs is the easiest way you can invest in real estate without owning a property. REITs are basically companies that own and operate income-generating real estate. They're required by law to pay out 90% of their taxable income as dividends, which often leads to higher yields compared to other stocks. So unlike other stocks, they can never cut their dividends even if they wanted to. By investing in REITs, you gain exposure to the real estate market without the need to buy properties directly. Now, if a company is not a dividend aristocrat or they're not a REIT, it doesn't mean they're not a good dividend stock to buy. It simply means they don't fall under either categories. And I'm gonna give you an example. Altria Group is a leading tobacco company and is known for its high dividend yield and strong payout history. One of the highest dividend yields in the market, which can be attractive to income investors. The company's steady cash flow from its tobacco products allows it to consistently pay out substantial dividends. They have very strong cash flow. As a major player in the tobacco industry, Altria generates strong and stable cash flow, which is critical for maintaining and growing dividends. Despite the challenges of the tobacco industry, it has remained profitable, supporting its dividend payments. Altria has a long history of paying dividends and has managed to maintain its payouts, even though it's not a dividend aristocrat. The company has shown resilience and a commitment to rewarding shareholders with dividends. Lastly, they have a stable business model. Tobacco products, despite declining consumption in certain markets, still generate steady revenue streams due to the addictive nature of the product. So this is just to show you if a company is not a dividend aristocrat or a REIT, it can still be a good dividend stock. Now let's go to part 4, how much money can you earn from dividend stocks? If you invest $10,000 in a stock with a 5% dividend yield, you'll earn $500 annually in dividends. That's money you can either use or reinvest. As mentioned earlier, reinvesting your dividends allows you to buy more shares, which can generate even more dividends. Over time, the compounding effect can significantly boost your portfolio's value. Reinvesting your dividends is also known as DRIP, Dividend Reinvestment Plan. Before moving on to the last part, which is when I'm going to show you how to buy dividend stock, I want to talk to you about stock appreciation. This basically refers to the increasing value of the stock. When you buy shares of a company, their price can go up due to the company's growth, strong performance, or positive market conditions. For example, if you buy 100 shares of a company at $50 each and the stock price increases to $75, your investment has grown by $25 per share. If you sell, you would make a profit of $2,500. That's basically 100 shares times $25 of appreciation. This is why I love dividend investing, because yes, you can get regular payouts, but also your investment grows. Now let's move over to the step-by-step tutorial on how you can buy dividend stocks. Alright, so when you click the link in my bio, this is what you're gonna see. So you're gonna go on open account so you can sign up for Moomoo and start investing. And then they're going to ask you what type of account do you want to open. You can Google these different accounts, but in short, the first one you're gonna pay taxes on it. The second one is the best option for a beginner. The third one is for those that want to invest for retirement. And the last one is for couples. The reason why I like the second one, TFSA, is because you can withdraw the funds anytime you want. There is a yearly contribution limit, but let's just get started with this one for now. If you're in the US, I recommend going for cash accounts. Margin accounts is for people that are a little bit more advanced. So we're going to select TFSA. And then we're going to put in all our basic information. So name, last name. I'm going to skip this because it's straightforward. And then you're going to put in your information, your SIN number. They're going to ask you a few more questions. Just go through them. Your investment objectives. It's just so they know that you're a legitimate person and not a robot. I'm going to do none of the above for this one. And then they're going to ask you for your phone number. I'm not going to show my phone number, which is why I'm directed to this page. This is what you're going to see once the sign up process is done. Now, some people might not see this page exactly. Sometimes it takes a few days for your account to be approved. Don't worry if you don't get approved the day of. Sometimes it can take a few days, and Moomoo might also call you to make sure you're a legitimate person. So just check back if you're not approved the day of, but for sure, if all your information is valid and legit, you're gonna get in. Okay, so now I'm gonna click on deposit funds. I'm going to select Canadian dollars. If you're in the US, just go for USD. These are the different options you have to deposit your money. The easiest way is through the online bill payment process. It's just like paying any other bills. I'm going to show you in a second, but this is like paying any other bills, your phone bills, your electricity bills. You just have to add Moomoo as a payee, and that's it. You can start with as little as $10. You can also do a wire transfer or an electronic funds transfer. Those are a bit more complicated, which is why I prefer the bill payment. When you first sign up with Moomoo, you have to go through this process. It's kind of like a backup sign up process. You're going to screenshot this so you can save this for later. And the password, you're just going to copy it because you're going to need it in a second. So right here, you're going to paste the password that you just saw. And then you're going to create your new password and confirm the password. That's it. It's just a one-time process. I'm going to deposit the funds and I'm going to go through the bill payment process. I'm on my TD app. Your app might look a little bit different, but this is what I see. And I'm going to add them as a bill. So just like we saw a second ago, that's the name that they requested to add as a payee. So that's what I'm going to do. And then I'm going to add the numbers. You can just copy paste the exact numbers. And then you're going to click on continue and add payee. And now I'm going to pay them and I'll just add $10 for the sake of this video. I also want to show you that you can do the exact same thing from the Moomoo app. It's totally up to you if you want to use your computer or if you want to use the app. This is basically what we just did, so you can again just copy paste it directly from here and add them as a payee. Okay, so now I'm going to show you exactly how to buy a stock using Moomoo. You're going to see how easy it is. The first thing that I would like you to do once you download the app, you're registered and you're good to go, your account is funded, is go through these tabs and just get familiar with the platform. So here you have markets, you can go into accounts to have a look at what you've placed an order before or how much money you have. We're gonna go under trade, and now I'm gonna write a REIT that's under $10. This is just for the video, this is not financial advice. Make sure to always do your own research. This is the page on which we're going to buy the stock. You can review the entire page, make sure you're in the right account. I'm in my TFSA, it's the only account I have. And once you're ready, you're gonna hit buy. And you're gonna click confirm, and there you go. We just invested together, your order has been submitted, and it's as easy as that to buy stocks. You can even click on the order status just to be sure. Under watch list, you can see all the other stocks. I really hope you found this video helpful. Please make sure to give this video a thumbs up if you did and subscribe for more. Make sure to also check out all the links in my bio for more. Let me know what dividend stocks you're planning on buying, and I hope to see you in my next video. Bye!